back to the channel. So here we're going to talk about Novonix and some other things. So Novonix, it was a hype stock, was ridiculously priced. It's come back down now. Would I buy it now? No, because I want to buy a ridiculously low price. So this thing called the yield curve, I'll put a link to the video below. Inverted yield curve. When this happens, not long after there's a recession, and this yield curve has predicted this every time, every recession, and it's just happened. So there's a recession probably coming soon, according to the yield curve, who's predicted all the last recessions. So video in the link below about the yield curve. So crash should be coming soon, so don't buy this for 74 cents. You probably want to buy this for 20 cents or something like what the cash has in the bank. So it's got 350 million to buy this stock. If you go to the cash now, 80 million. So if you want to buy this at 20 cents, then at least you're buying it for cash. Ridiculously priced. Like, well, it's not going to get that low. It probably will get that low in a crash, who knows. We just don't buy it, because if you can't pick the stocks, just buy a high yield ETF. So basically it buys all the number one earners, the ones that pay out dividends. So this company like fails a bit, pays less dividend, well this one makes more, etc. They're all making money. Like, to live, people have to go through these companies. It's basically a money funnel, funneling in the economy's money. And guess what, you don't want to buy that at all-time highs. You want to wait for that to drop down and get a good price, and then you can sit back while it's rising up and collect dividends, sell out, go on fixed interest again, and repeat. You get that. It's boring, but it's better than losing money trying to short shares, because that's pretty risky. Anyway, back to Novonix. So let's go through what they're doing. So you don't know, they make the stuff that goes into the battery. There's synthetic graphite and there's natural graphite. So synthetic is made from petrol. Natural comes from the ground. So petrol, they have to do the thing, heat it up for like 3 weeks, and that makes synthetic graphite. Mother Nature's done that 3 weeks of heating up through volcanoes, whatever it does, to the natural graphite. So natural graphite was cheaper. Then it turns out the materials for synthetic and the energy was so cheap that China was doing it cheaper with synthetic graphite. That's why natural graphite dropped in price. So in winter in China, they need all the energy, so the price go up. So that could affect it. Also, in the future, we're going away from petrol, which is the creator of synthetic graphite. So it's going to be more scarce, therefore maybe more expensive, and then natural might have its place. Also, China did a ban on exporting graphite to get back in America. That sent prices higher. So this stock here, they all dipped down, and then that announcement came out, they all went back up a bit, but the crash could come soon, they'll go back down again. So you want to buy at ridiculously low prices, I've learnt, or if they're printing money, then you can probably buy and it goes up, I don't know. But ridiculously low prices, you could have to wait 3 years to get them, but it's better than losing money. So ridiculously low for this company would be 5 million. So even if the company doesn't go well, if you buy it at a ridiculously low price, it could just double on people buying into it. You get the point. Like, from go to 10 million to 20, might be one small announcement, and then it probably drops down again, but you get the point. Ridiculously low prices means it can go up easier. Don't know the science behind it, but anyway. So back to Novonix. So they want to go to 150,000 tons per annum. So you times that by 1,000, what's that, $150 million a year? Or if they make more profits, not sure, but $150 million a year for a company that's worth $350 million now seems pretty good. Take in mind they will have to build factories, it costs money as well. They are getting help from the American government, because China's said no, we're not exporting graphite, so the American government's going, well, we don't care, we're going to help out Novonix get it. So going 20,000 tons per annum to start with the first plant, so that might make them $20 million per year, maybe more, maybe less, depending. They might be able to streamline, get this really cheap. Yeah, so that's that. They're doing the anode side of the battery, and they're doing the cathode side as well. The cathode LFP is like the popular battery because it lasts a long time and it's cheap. But Novonix is doing more the nickel-based chemistry, which is for like fast cars who don't care how long. So Rimac here wants it to go fast. They don't care if the battery dies in 3 years, 5 years, 10 years, whatever. Although if you watch some videos on the guy behind Novonix, Jeff Dunn, he can make the nickel-based batteries go a long time as well. if you don't overcharge them, which isn't a problem with LFP. So yeah, they're doing that. They're going to streamline that. They're doing the cathode side as well. So they're chipping away, and they can chip away for a long time, and the price goes down. Here we are, targeting margins. Anyway, I'll let you read through this. A lot of boring stuff that you don't really need to read unless you're really interested in margins. So 30% margins. Anyway, boring, pretty boring stuff. Thing is, they're making battery material. They're probably the only ones in America, and you just want to buy them cheap. Otherwise, don't even bother. Okay, so that's about it for that. Another company, WKT, they're making graphite. They're about to get in production. They got a thing in Tanzania. Graphite's not just in batteries; it's in steel manufacturing, steel, other stuff, and insulation, fireproof insulation. So that's the industry that these guys are going into. If the battery industry picks up, they could probably switch to the battery industry if it's paying more money. But right now, they've got pretty good figures. For a $100 million company, they say they can make $25 million after tax. So that's like $50 million before tax and costs, $25 million after tax for a company worth $100 million. If that comes true when they get into production, could be at least doubling. They just bring an announcement saying they're going to get in production soon. They went up quite a bit just on that announcement saying they're getting in production soon. And actually bought in, seeing it was this low, doing the rough figures. It is sort of bad timing, because if this market crash happens, you could get them even lower. But it seems like they're pretty decent. They might not make that 25 million after tax. They might only make 10 million, which is still pretty good for a $100 million company. And then they can expand in the future. They got higher grade, good resource, good economics, and they're actually building the mine now, and it's going to be making real graphite and getting real money for that graphite. Okay, so I'll leave the video at that. So remember, if you don't know how to pick stocks, probably just go on fixed income. Watch that video on the yield curve in the link below. Wait for the crash. Buy into this. Every $100,000 you put in, you get $8,000 a year, basically for the rest of your life. And then you can wait and sell out. So maybe a stupid video, maybe not. Like and subscribe, and I'll bring more in the future.